Hey TGO traders and investors, Whiz here, the primary and weekly options model portfolio manager here at TGO, and getting a little bit of a reprieve today out of the market, even though the tension really is starting to get a little higher here in this debt battle. The president's not moving. Boehner's starting to get his back up against the wall. That our king is not even going to sit down at the table and talk about things. It's really starting to get pretty ugly. Thought this was pretty interesting that the odds of the U.S. Treasury defaulting on our risk is now about the same as JCPenney's was in July. Isn't that pretty interesting? So for the first time since the debt ceiling debacle all the way back in 2011, and actually worse than during the Lehman Brothers fiasco, the cost to insure against default on U.S. Treasuries is going through the roof. That's pretty scary for world markets. But folks, it's absolutely ugly out there. We have got to fix the problems we're in. Look at this. We have added 2 times more debt in the past 2 years than we have in economic output, in our GDP. That just doesn't work, folks. The math does not work, and the president just sticking his fingers in his ears and going la 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 la, not going to talk to anybody, is going to absolutely destroy this country. One of the reasons we're getting a little bit of a reprieve in the market today is the nomination of Janet Yellen to take over for the Bernanke. Now, obviously, Janet Yellen is the current XO. She's the executive officer, right-hand woman to the Bernanke, and she's going to continue his easy money policies. And as a result of this absolute fiscal fiasco in Washington, we might even see the Fed not do an OCTAPER and might actually continue their asset purchases into the indefinite future. So here we go, back in bizarro market. The theater will continue out of Washington, and the markets will continue to be volatile. But check this out. I want to show you 2 positions in one of the portfolios I manage. Look at this position, up nearly $9,000. $9,000 in profits in about 3 weeks. This was a bullish double vertical on the volatility index, the VIX, out to October, and I'm going to close this trade today. It was up $9,000 a couple minutes ago. Now it's $8,900 in profits in 3 weeks on a bet that volatility was going to spike. I'm getting ready in a live trading this afternoon to roll inverted and do the exact opposite trade, because I think volatility is going to come back in once we see a resolution to this. So $9,000 in profits in about 3 weeks. Also, you can add to that another $3,000 in profits. So we're looking at $12,000 in profits in the past 3 weeks on this volatility and the market pulling back. Pretty much nailed this. Very happy with this. And this, I'm going to tell you that this was kind of a layup. Knowing that volatility was going to spike and the market was going to pull back on the stupidity in Washington was a layup. If you're not seeing about $12,000 in profits recently over the past 3 weeks, if your portfolio is hurting as a result of the increase in volatility in the market pullback, you're doing it wrong. Not to say I'm Nostradamus here with the markets, but if you don't know what you're doing, or you're getting your rear end handed to you in this market, do me a favor, register to attend our live trading webinar tomorrow. That's Thursday. Click on the link in this email to register for the event, because I want to help you out and help you navigate through these pretty treacherous times that we're seeing in the markets. Okay, got to run, get ready for a live trading session. So happy hunting, make sure you hedge, and hopefully I'll see you tomorrow. We'll see you.